Hello and welcome to this ET Now special. I'm Nayantara. Well, as we get ready to welcome 2023, I've come to the offices of Sequoia Capital in New Delhi to interview Rajan Anandan. Rajan, this is almost like an annual feature having you here towards the end of a year. So thank you once again for making this a reality. What are you looking forward to? Are you looking forward to the new year? It's been such a bad 2022, a tough year.
Well, 2022 has been turbulent. 2021 was exuberance. 2022, we saw lots of changes.
Yeah.
Look, we're really looking forward to 2023. We think this is going to be a very good year to build.
So it's not going to be worse than this year?
The funding environment, so you have to say what is worse and what is going to be better, right?
Okay.
The environment in which to build a company actually is going to be better on all dimensions except fundraising. Okay. Right? So talent will get more affordable. There's going to be a lot less noise. Many of, let's say, a startup's competitors, many of them may actually not be around by the end of the year if they don't have high quality businesses, right? And if customers are willing to buy your product and pay for it, it means you built something that's a must-have product. So it's a very good time to build. Similarly, Nayantara, 2023 is a great time to invest. Why? Because, again, it's a lot less competitive. Valuations are much more reasonable. And companies that do raise are going to have very high quality businesses, right? And we can talk about what that means at different stages. So time to build, time to invest. And I would say the most important thing going into 2023, it's going to be the year of very high quality. Okay. Quality, quality, quality. That's going to be the theme for the year.
So it's going to be quality investing as well?
No, it's quality everything, right? So basically, at the end of the day, the focus is going to be on quality businesses. So what does that mean for a startup, right? If you're a seed stage startup, you only should have one goal, which is to get to extraordinary product market fit, right? If you've raised your Series A, your goal should be one. If you don't have extraordinary product market fit, make sure you get to that, because scaling without that is not a good idea. But second, get to very, very sort of viable growth engines, right? Where your LTV to CAC is very, very strong. And if you're a later stage company, you've raised a Series C or D, you have to make sure that you have very strong unit economics. And if you're public, you either better be profitable or you better have a serious path to profitability very, very soon. Because one of the things we've learned with public markets, not just in India, but also in the US, is public market investors want to see companies that are going to build what we call very strong economic engines, right? So at every stage, you've got to focus on quality. So if you're just starting up, make sure that you understand that you're solving a must-solve problem, right? Yeah. Because the era of nice to have is gone.
No.
Right? So I would say on every dimension of company building, next year is going to be much better than this year, except for fundraising. Fundraising, I think, will continue to be quite challenged for most companies, except for the ones that have very high quality businesses.
When you say challenging, do you mean that we could maybe start to see spring, or you're expecting it to be what we call to be the funding winter?
No, so I think what you should expect is what we are seeing now today. So Nayantara, as you know, right, as Sequoia Capital India and Southeast Asia, we raised $2.85 billion in June, right? 2 billion of that, so basically 16,000 crores is dedicated to investing in Indian startups. $850 million is our first Southeast Asia dedicated fund. Over the last 4-5 months, we've been very active at seed and venture stage. But if you look at the companies we are investing in, they're very high quality companies, right? Founders who have exceptional sort of founder market fit, problems that we think we're large. And if the company has launched, we want to see early signs of product market fit. Although at seed, more than 50% of companies that we invest in are pre-launch. But if you look at where we are investing in Series A companies, right, the bar is higher. So over the last 4-5 months, India's early stage ecosystem at seed and venture is active. Everybody is back to being active. It's just that the bar across the board is much, much higher, right? If you have so for instance, if you're trying to raise a Series B and your unit economics don't work, you're not going to raise a Series B now. Same thing's going to happen in 2023. What I can tell you is 2021, Nayantara, isn't coming back. Isn't coming back for a very long time. So what we're in now is the new reality. Right?
So has the bubble burst?
I don't know about a bubble. The period of, depends on what a bubble is, right? We had a period of exuberance. It was not...
Irrational exuberance.
It was exuberance. I mean, exuberance is exuberance, right? Yeah. You can call it whatever you'd like. But that was, by the way, it was not just in India, it was globally. It was in the US, it was in China, it was all around the world. It was in every asset class because $7 trillion got pumped in the US economy.
Yeah.
Interest rates went down to zero, and then basically capital flowed into every asset class, including public tech and private tech, right? And then we know what happened earlier this year. So essentially, what we're in is a new normal. This is the normal, right? So what founders should keep in mind is 2023 is the new normal, which is the normal that we're in today. So today, you can actually raise capital, but you have to have a very high quality business, and your metrics have to actually be very strong at a different level. So I'll give you an example, okay? 50% of new seed stage investments that are happening in India today are Indian entrepreneurs who are building software for the world, right? From day zero. Essentially, think of it as SaaS, developer tools, modern data stack, infra, cybersecurity, vertical SaaS companies, increasingly
Just more
AI
specialized,
companies. You know, they're building software for businesses, for large businesses or for small businesses. Or these are software companies, right? They're not consumer internet, they're not e-commerce. 50% of companies today in India that are being launched are global from day zero, okay? If you go back to last year, 2021, if you had a very strong founding team building a software company for the world in a large category, if you got to, let's call it $300,000-$400,000 of revenue, okay, so 4 or 5 crores of annualized revenue run rate, you could raise a pretty large Series A,
Yeah.
$10 million or more at a very healthy valuation. Today, that is not going to happen. Today, if you want to raise a Series A as a, let's say, software company that is building for the world, you have to have well north of $1 million of ARR. And if you look at some of the Series A's that have happened in the last 4 or 5 months, they're getting closer to $2 million of revenue run rate with very strong unit economics, growing at 2x or 3x year on year, right? With sales payback periods that are well less than a year. So essentially the bar to be able to raise any given round has gone up, and that's happened over the last 3 or 4 months, and we don't see that changing, right? So in many ways, whether you can call it whatever you want, but this is the new normal, and I think it's important that founders understand that we are in a new normal. So what we encourage all our founders to do, both our investee companies but also companies that we're talking to, is to understand, depending on what round of financing you're trying to raise, what are the set of metrics that you need to reach to become a high quality company at that stage, right?
Yeah.
High quality at different stages means different things. So the market is going to be the way it is now. But I think the good thing is we're going to see a clear separation of high quality companies from the rest. So
as that separation happens, what's also going to happen to the larger environment? Because, as that separation happens, this also been the year of layoffs, it's been the year also of markdowns.
Yeah, so basically, a simple way you should think about it is if you don't have a high quality, if you're building a company, if you don't have a high quality business today, okay, and high quality means different things. You're a seed stage company.
Define high quality for me.
So if you're a seed stage company, do you have exemplary product market fit or not? It's very simple. There's only one question that matters if you're a seed stage company. If you don't have exemplary and not mediocre product market fit,
exemplary.
Okay? Exemplary product market fit, you should just focus only on one thing, which is get to exemplary product market fit, otherwise pivot. Because if you have mediocre product market fit, you're not going to build an enduring company. We know that. And in this market, and whether it's end of 2022, all of 2023, I think even in 2024, 2025, you're just not going to be able to raise capital, right? Because Series A investors have no interest in funding a company that has mediocre product market fit. And boy, if you don't have product market fit, you're in big trouble. So you should continue to kind of keep your team small, keep iterating, keep trying to find it, right? If you raised your Series A and you don't have product market fit, then you have only again one goal, which is to get to exemplary product market fit. Now, let's say you're a later stage company, okay? You've got product market fit, but you've been very focused on growing and your unit economics are not great. What does that mean? If you're a transactional business, it's gross margin, contribution margin 1, contribution margin 2. Contribution margin is when you take out all marketing expenses and everything else that's variable, okay? If your CM2 is negative and you're a growth stage company, you've got to change course immediately. Immediately, right?
Would you even take a meeting with such people?
No, look, as you know, we take meetings with interesting
No,
entrepreneurs.
I'd heard that things were so bad that VCs would not even meet those startups who were not having green contributing margins.
No, I would say, look, first of all, you get to that stage as late stage, right? I mean, at Sequoia Capital, I focus on very early stage investments. More than 50% of the companies we invest in, even today, as of last week, even last week, the investment that we closed hasn't launched yet. It's a pre-launch company. More than 50% of companies that we invest in at Surge, for instance, are pre-launch companies, right? But later stage companies, no, investors will meet you, but keep in mind, the likelihood that you'll raise is not high. And look, you've seen that the best example of quality is what we have seen in global public markets, right? Everybody focuses on the 7 public Indian tech companies, but you have to keep in mind the Nasdaq is down 35%. Most mid-cap tech stocks, even the big names like Zoom and others, they're down 60, 70, 80, 90% in the US,
Correct.
right? So in the public markets, you've seen this in spades. A quality business or not. Are you growing but with profitability, or are you going with a path to profitability or not? Are you a market leader or not? And basically, so at every stage, Nayantara, the big focus is going to be on quality.
As you also focus on quality, can I ask you, you've talked a little bit about SaaS, software as a service, which is going to be more specialized. What is Sequoia looking for in 2023? A year ago, a lot of it was Web3. I suppose it's not the case now.
So basically, look, there are about 4 or 5 themes that are interesting, right? So India is now beyond the stage, Nayantara, where it's about one thing.
No.
Right? We're about many things, right? Many sectors, many themes, many interesting themes. I think the most dominant theme, if you will continue to be building software from India for the world, okay? So this is a broad category of companies: SaaS, developer tools, modern data stack, infra, cybersecurity, and the list goes on. Vertical SaaS, now AI, right? So that will continue to be the dominant theme. Now, within that set of themes, as we go into 2023, we think AI. So for instance, in our last search cohort, we had a company called GAN.ai. By the way, you should use GAN and create, personalized videos from Nayantara Rai for all your followers. It's pretty cool, actually.
But first try the essays, right? That seems to be the new big thing.
Yeah, there you go. So basically, what we're seeing, actually just within search, by the way, we have over half a dozen AI first companies now, right? Which are being built from India or Southeast Asia for the world. So AI is one sub-theme that we think will gain more prominence in 2023. The second one is vertical SaaS, right? Vertical SaaS is where you're building software for a specific vertical. So recently our venture team, my partner Abhishek Mohan led an investment in a company called Prism Force, right? They're building software for the IT services industry for their internal use, right? For their talent management sort of needs. Another company.
So they're willing to outsource and they're willing to go to a startup for those
You should
things?
do a story on Prism Force. Yeah, it's very interesting. It was announced about 6 weeks ago, I think. We announced a Series A investment in Prism Force. So that's an example. They're building software for the IT services industry, which is a $200 billion
and they have
industry,
them
right?
already as clients signed up.
Well,
Indian
you have to talk
IT
to the founders.
services
You should talk to the founders and get their story from them. But that's one example, right? Another example is a company that we in our most recent search cohort called Attentive.ai. So they build software for outdoor services firms in the US. Here's an amazing thing about the US, right? When you have a $26 trillion economy, just outdoor services in the US is a $100 billion industry, right? It's got thousands of firms that do everything from lawn mowing to, so on and so forth, right? None of those businesses use software. So they've actually built a vertical set of software that's AI first, actually, that helps those companies, those small and mid and large enterprises in outdoor services in the US, digitize their businesses, right? So vertical software, we think, actually, if you look at in the last 4 or 5 months, more than 30% of the investments that we've made as Sequoia at seed stage and at venture stage, surge and venture, is actually these vertical software companies, right? So and developer tools is the third area, right? There are 30 million developers. How do we make these developers more productive? I think that's going to be a perennial theme. So I'd say that's the first big theme, building software from India for the world. These are 3 sub-themes that are interesting. The second mega theme is the India consumption story, right? India obviously seems to be bucking the trend. We'll have to see, how 2023 works out. But the reality is Indian consumers continue to be very vibrant. Indian businesses continue to spend. And within the Indian consumption story, Nayantara, we have a bunch of different things going on, right? New consumer product brands in beauty, in food, in toys, companies like Skillmatic, water purification, company like Drink Prime in Bangalore, right? Across the board, right? So you've seen companies like Mama Earth and many others in the beauty space. You're seeing lots of new innovation in food. So that's big. We think that will continue because as India goes from 3.5 trillion to 7 trillion of GDP.
And the third largest economy.
No, not only that. Indian consumption today, Indian consumers spend $2 trillion, okay?
Yeah.
Over by the end of the decade, that number we are going to add another $3 trillion of consumption per year in India, right? So you can imagine how many new companies could get. So new brands. The second big theme in consumer is vertical commerce, right? Today, over 150 million Indians buy products online. I'm not talking about digital payments. Buy products on platforms like Amazon and Flipkart and Nykaa and so on, right? So Nykaa was a beauty vertical commerce play. You have Lenskart in, eyewear. You have First Cry, in baby and moms, right? What we are now seeing is many, many different verticals emerge, Nayantara. right? In fact, in our next Soch cohort, you'll see a couple of those companies that are very interesting. New verticals, new themes. So that's second.
Like what kind of vertical?
So I can't tell you, but you know.
Don't tell me the
next-
names, but I mean like the
No,
kind.
but you can tell, right? Home furnishings, you know, it's huge, huge
That's
space.
already happening.
No, but
we look at
there's
Pepper
much
Fry,
more,
we
but
had
there's
Urban
much more.
Ladder.
It's still very early days. All those companies, you know, home furnishings is a huge space, right? It's largely unbranded, and you'll see a few other spaces when you see our next. Now I can't tell you any more because then you'll know which companies I'm talking about. So that's second, and third would be on consumer is gaming. Right? So gaming, we think, can be a very, very large market. Of course, there's some regulatory discussion going on now. And we need to make sure that...
About the GST and things
Yeah,
like
because
that.
if you apply the GST on the entire consumer value, right, then... and if
Which
you
is
put
the pot
18%,
and the subscription fee.
If you apply
yeah.
18% on the pot, you will, you know, India will actually destroy a multi-billion-dollar gaming industry. That's not a good thing, right? But the reality is, look, we have an opportunity to build a gigantic gaming industry. Very, very large gaming industry, right? Global spends on gaming is, you know, several $100 billion, right? And India now has 300 million gamers. So consumer is the second big space. It's these sub-segments of each. Third would be climate tech. We're seeing a lot of very, very interesting companies in climate tech, whether it's EV, whether it's food, whether it's carbon markets, you know, that's sort of the third. And the fourth area, which I'm very excited about, Nayantara, is new IP-based innovations, right? Intellectual property-based innovation. So if you look at India's innovation ecosystem so far, we haven't had, you know, fundamental IP, right? Patents-based, you know, kind of innovations that are coming out. We're beginning to see that, right? So as you know, India has a huge focus on semiconductors. We're beginning to see very, very interesting semiconductor startups coming up. You've seen it in space. Actually, you know, you should, if you haven't yet, you should go and visit the Absolute office in Gurgaon. They've got over 100 scientists working on biosciences, right? So essentially, here's an interesting stat for you. India has over 2 lakh crores of subsidies for fertilizers in India, right? Absolute over the next couple of months, over the next month or two, will launch a set of new biopesticides and biofertilizers that could help reduce by 50% the subsidies that we give for fertilizers, because these new products that they're launching don't need to be subsidized, and they're actually good for the environment, right? So I think climate tech has a lot of innovation, from EV batteries to EV OEMs to EV financing and so on and so forth. And then finally, it's this space of IP-based innovation. And what we're seeing now is, especially IIT Chennai, if you haven't made a road trip to IIT Chennai, you really should. Go and understand, Nayantara, the amazing innovation that is coming out of IIT Chennai, because this is all IP-based innovation, right? It's not about, and by the way, these are more complex businesses. They're hardware, they're software, they take a lot more time to develop. There's technology risk, there's execution risk. Many of them will require a lot more capital than traditional internet businesses or traditional SaaS businesses. So those are the 4 or 5 themes. So it's not one thing.
Big thing.
We are beyond the.
But
you
you
know,
didn't mention Web3, which was the big idea of last year. Is that over and done simply because of the price of the Bitcoin, Ethereum? Even though most of you said this is the future, it's like saying there's not going to be an internet and we shouldn't be looking at the token prices.
You know, it's very interesting, Nayantara. In the early 90s, I remember MIT, you know, and I was working on what actually became the internet. And then I remember 95, right, like Netscape went public. And then 99, you know, we had all pets.com and all these companies went public. And in 2000, the internet
bubble.
The internet corrected big time, right?
Yeah.
Everybody said the internet was over. And look at where we are in 2020.
But you didn't name Web3s. That's what I'm trying to understand.
To look at blockchain technologies. And
it's very different from crypto.
No, what I'm saying is, saying blockchain technologies are over is sort of like saying the internet was over in 2020. So that's why I drew that analogy, because this is still a technology that is vitally important. It is a technology that is still very, very early. And it's a technology that, you know, nobody, not you, not me, not anybody, not even the, you know, Web3 ecosystem today can tell us and can articulate how what are going to be the killer apps of Web3? We don't know yet, right? It's much like in 1995, would we have predicted Google? No. Could we have predicted Amazon, which was actually went public in 97? No, right? Could we have predicted Facebook? Absolutely not. Could we have predicted TikTok? Absolutely not. Could we have predicted the cloud happening? Absolutely not. So all of these things happened after the big dot-com bust in the year 2020. So the way we look at Web3 is, look, we continue to be believers in Web3. Our focus now is in Web3 is on investing in infrastructure companies that can make Web3 faster, lower cost, more secure, and more usable.
Rajan, you know, 2022 was also a tough year because it was a year of soul searching for Sequoia, for all VCs, and hopefully the founders as well. Corporate governance. as we close on this year, where everything has been on doglapan and all of the stuff, the brashness that came out and all of that we've seen, founders getting fired as well. How are you going to make sure you don't get your eye off the ball in 2023? Are there new checks and balances in place?
And look, so building world-class companies requires world-class governance, right? We've always believed that. And this year, we had a handful of situations as the Indian ecosystem that made, highlighted that even, one or two companies, despite a firm that has, in India over 400 investments, actually is challenging, right? One is more than, having one tough situation is more than what
it's not just about what maybe have happened in Bharat Pay, but, the very fact that you don't have audited results, or there are stories of how founders are not sharing balance sheets with investors. Well, all of that needs to be checked.
No, so basically, you're absolutely right. So there's no question that as our ecosystem grows, right, we have entered a new phase where we have 130 unicorns. We have now public companies, right? We have a scaled up ecosystem today, and it's very, very important that as an ecosystem, as a firm, we're obviously doubling down, tripling down on corporate governance. As an ecosystem, we need to do that.
Yeah.
Right? So what does that really entail, right? Firstly, pre-investment, we have always done very rigorous due diligence, right? We talked about this actually last year.
Exactly.
Last year we talked about this, right? Financial diligence, legal diligence, we do that, right? Once we invest in a company, depending on the stage of the company, there are different things that you have to put in place, right? At some point, you have to have an independent CFO, right? It can't be, the co-founder cannot be the CFO after a certain stage, right? Or
when is that stage?
I would say after Series B, you really do need let's say you've raised, I don't know, 10, 15, 20, $30 million of capital, or the company has gotten to a certain scale on revenue, you really need to have an independent CFO, right? You need to have an audit committee. You have to have independent board members. As you said, right, you have to complete the compliances on time and without actually having slippages on that. So what we've done for our own portfolio, Nayantara, is by stage of company, we very clearly defined what are the absolute must-haves. We've rolled that out across our portfolio. And now actually, not just as Sequoia, but as an industry, over the next couple of months, you will see something come out as an industry where we're going to try to help founders
understand. A charter
understand,
for corporate governance.
and also helping founders understand, look, every founder in India wants to do the right thing, right? Because every founder in India wants to build a world-class company. It's unfortunate that we have one or two founders who don't do the right thing, right? And therefore tarnish the entire ecosystem, right? So what we know for sure is that all founders, with the exception of maybe a handful, absolutely want to have world-class governance because they know that it leads to world-class companies. But very few of them actually know exactly what to do. So as an ecosystem, what we need to do is define what those sets of things are and then build awareness. So you'll see a big awareness campaign just to help founders, management teams, boards understand what should they get in place so that they're not surprised by some of these things, right? Both founders aren't surprised, investors aren't surprised. Clearly, look, I think the ecosystem is on it, and you'll see a lot of work has already started, a lot of work is underway, a lot of work was happening to start with. And you'll see this continue. But as we've been very consistent with our position, Nayantara, as a firm, look, when we do see wrongdoing, we will investigate and we will take action. But as an ecosystem, we're very focused on, absolutely. We'll just keep upping our game.
Rajan, the other thing I wanted to ask you was, and you brought up, for example, how the NASDAQ is down 30-40%. Now, what we've also seen in India is it's been one of the best performing stock markets in the world, decoupled almost from the US and the kind of headlines that we were getting. Going into the next year, at least the stock markets, the public markets are anticipating higher allocations towards China. If we were to attack the private markets, is that an area of concern?
So look, basically, if you look at the Indian startup ecosystem, right, in the first 7 months of this year, India dedicated funds, right? So Sequoia, Accel, Elevation, Lightspeed, actually most recently Bloom's 250 million new fund. In the first 7 months, India dedicated funds raised over $6 billion for early stage. Okay, this is largely seed, Series A and Series B. That is more capital that has ever been raised by India dedicated funds in a 6-month period. So if you look at India today, at the early stages, there's enough capital, Nayantara, right? Sequoia, we raised 2.85 billion, 2 billion of which is dedicated to India, right? So there's more than enough capital in the private markets in the early stages. In the late stages, what we've seen is some of the largest investors of late stage, right? So if you look at SoftBank or you look at Tiger, right? Either crossover funds or in SoftBank's case, SoftBank, those firms have actually, have become less active this year, right? So what we see going into next year is in the early stages, if you're building a high quality business, there is more than enough capital. Okay, seed, Series A, Series B. I think on late stages, you have to be an even more special company because there is capital, but some of the most active investors, as you said, right, they're focused more on public market positions, securing their base and so on and so forth, right? All the crossover funds that we know who are very, very active over the last several years, as well as some of the other brands, they're actually securing their public market positions and so on and so forth. So as we go into next year, when it comes to private markets, look, we don't have a shortage of capital, right? Funding pace has slowed down. I think it's very important to keep that in mind. Is there enough capital?
Is there.
The capital is there. The capital is there.
The capital deployment has...
The investment pace has slowed down. And the key thing, if you're a founder building a startup, is just focus on quality. Do you have a high quality business? And you should be true to yourself. Ask yourself, do I have exemplary product market fit or not? Do I have unit economics that are amazing? If you're a late stage company, you should ask yourself, am I profitable? If not, do I have a path to profitability? Because if you're a late stage company and you're burning $20-30 million a month, that is not a good place to be. If you're a late stage company and you're burning $2 or $3 million a month, that's probably not a good place to be. Right? So again, right, but if you're an early stage company, we don't expect an early stage company to get profitable 4 or 5 years. So it's much more around, do you have great product market fit? Have you built products that customers really, really love? Have you found acquisition and growth engines?
And on that very optimistic note about the charter to becoming the #1 startup destination in the world, Rajan Anandan, thank you for all the time. Here's wishing you happy holidays, happy new year. See you in 2023.
Thank you. Happy holidays.